Welcome back to freetradingvideos.com. And let's take a gander at Apple AAPL. Let's just do some in-depth technical analysis on this and just get an idea of what might be happening. I drew a couple trend lines. The last two swing highs, major swing highs, here and here. You notice I cut off a couple red candlesticks. It's a very advanced way of drawing trend lines. I'm taking out specialist behavior there, taking into consideration some manipulation patterns. And then here, I'm going from this swing low to this swing low area. And I'm going to tweak this just a smidgen. I feel much better about that one. Something to look for is every time you see these little white candlesticks that hang out, down here at the bottom, you usually have an up day or a series of up days right after. So these white candlesticks down here pop up. Another white candlestick dangling down here by itself, pop up. This white candlestick took a day and then it popped up. Then we have another dangling white candlestick, pops up. Big one, popped up just one day. And anyway, so it's a characteristic of a chart, and so something to watch out for with Apple. Apple's had a nice run here. Look at this. We came up 1, 2, 3, 4, 5, 6, 7, 8 days. It's an 8-day run. Studies show usually you'll run 5 to 6 on average, and this is beyond an average run. And so it's a real nice run off of support down here, smacked its head right at resistance, and then busted through in the 50-day moving average at the exact same day. I mean, boom, boom. Very nice. And continue to run up. And look how we did kind of a sideways motion here. See this? Where it kind of hit its head and stalled. Doesn't surprise us because of this major swing high that we have right here and right here. It just does not surprise us that $180 was an area where it's going to take a breather. Now, how many days down should we expect? 3 to 4 typically. But where would there be natural support areas? Well, the 50-day moving average could certainly be that. And I have my EMA moving average a little faster, this pink one coming up, that would be at the same area. So I could see that being a natural area for support. I also could see this trend line that we have drawn acting as major support getting here. When it gets here or here, we'll have the 20-day moving average rolling up about that time. I definitely would be looking for some sort of opportunity to enter in this area or earlier up here. If you use Fibonacci's, you can also draw a Fibonacci to see if that will give us any insight. So I'm going to draw a Fibonacci line up here. And most of you probably don't know what a Fibonacci is, and you could do some research online about Fibonacci's. And right here, we have a pullback. The first area of support will be this 38.2 area, which would put us right at $170. $170 is going to be a whole dollar amount that can act as support. And with the 50 being there too, I could certainly see a 3 to 4 day pullback right here into this area right there, and look for a bounce for an entry. And check this out. Here's my 50. Very important that we stay above the 50 Fibonacci level. So we run up, 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 up. We retrace 38%. We retrace 50%. We don't want to go any lower than this, and a bounce. So I would not want to personally see this drop to hit this support line, because that means we'd go below the 50% mark. If it does drop, this line will certainly act as support. But the sweet spot right now is 170. I see us drop it to 170 where the 50-day moving average is, the fib 38.2, and yeah, that's what would be a really good area for a bull pullback. So anyway, a little tip for you is never chase a stock. It's an amateur move, and a lot of us get sucked. We get sucked into this. And what does it mean to chase a stock? After a multi-day run, you just get all excited and you enter. Well, the problem with that is studies show that we only go up 5 to 6 days. Now, that could be far more than that, or it can be less. That's just an overall average. So take that in consideration. So anyway, after you've run up a few days, don't chase them. Don't buy it. If you chase a stock, that's like a dog that chases cars. You know, the next summer you see that they only have 3 legs or they're not around anymore. So just don't ever chase a stock. Be very patient. Be a patient trader. And when you have a nice run like we have in Apple here, just be patient enough to wait for the pullback. If the pullback is light enough and shallow enough in this retracement on the pullback itself, and you get a bounce, always wait for confirmation on the bounce. There's your entry, and that might give you a good opportunity. So anyway, use your technical analysis and use those technical abilities that you're starting to develop and make better trades in your trading journey. So anyway, there you have it. Take care. Happy trading to you, and never, ever, ever trade without a stop loss.